What's up, guys? Stas here. So I want to break down a stock in this video that has not participated in the 2023 rally, and that stock is Enphase, ticker symbol ENPH. We're going to break down the charts, go over the numbers here, financials, my thoughts, what the company does. So if y'all find value, hit the like button, make sure to subscribe, and don't forget to follow me on Twitter at Stas Talk Stocks and get your 16 free stocks from Moo. Link down below. We'll talk more about that later. And with that being said, cheers. Let's dive into it. So like I said, guys, Enphase has not participated in the rally at all this year. In fact, every single month it seems like it goes lower and lower and lower. We really have not had any up moves in this stock at all this year, and we just actually hit a fresh low, no joke, a couple of days ago when we hit $116 per share. And right now in real time when I'm making this video, excuse me guys, we're up 5% and doing pretty well in the midst of an overall red day. I mean, all the index are down, the VIX is up. So Enphase is up, which is good, up around 5%, $5.50. But overall, guys, come on, it's obvious we're still in a downtrend. We're under the moving averages, death cross, all that good stuff. And if you guys, well, not good stuff, that's bad stuff if you're a bull, but it could open up an opportunity if you have some patience, which, full disclosure, guys, I do not own Enphase right now. I'm planning on buying a little bit here at some point. Maybe we'll see. I'll keep you guys in the loop. But this is one that I'm watching very closely as it's beaten down, or it's been beaten down even more from just 275. I'm not sure if you guys remember, but Enphase was at what, 350 at some point? Yeah, 340 back in the end of last year. So like I said, this stock has not participated at all this year. In fact, it's gone down a lot. It has not gone up at all. It's gone down a lot, about, let's see, percentage-wise from the highs, about 65%. But with that being said, if you guys remember, in 2022, Enphase actually did very freaking well when the overall market was getting clobbered in 2022. You know, during that whole period where the NASDAQ got hit, tech stocks, S&P, the Dow, the Russell, you name it, Enphase ended up going from 135, you guys can see right here, this was in the beginning of 2022, all the way up to 340. Yeah, 340 throughout the entire year. It's almost like once the new year hit, everyone started dumping Enphase. It looks like that's kind of what happened there. My theory is, people held it through the end of the year. Then they dumped into the new year because they didn't want to pay taxes in the prior year. Maybe, I don't know. But either way, we hit 135, or rather we were at roughly 115. We got all the way to 340 throughout 2022. That was a huge year, about 200% move there, a 200% move. And from that point, guys, we've been selling. And to be honest, I'm not surprised considering how much the stock has gone up since it IPO'd. I forget when it IPO'd. Let's pull the max chart up. Yeah, it was back, it was actually a while ago, about 10, 11 years ago. It was at $6 for a while. Then it hit 65 cents. And it really started climbing up in 2019 in the middle of the year. Of that year, we started going 10, 15, 20 bucks, and then it shot all the way to 340, like I said, and now we're cooling off a bit. So this is the opportunity that I've been waiting for on Enphase. This is a stock that I've covered time and time again on my YouTube channel, guys. Back during the the bull phase of 2022, we covered it a lot. And now we've seen a massive pullback. And for me, when I'm looking at stocks, for a swing trade, for a midterm trade, whatever, long-term investment, I like looking at weakness and seeing if there's anything there. And I believe, and mind you, this company's profitable right now. I think this could be opening up a solid play, and the company's still growing revenues. Again, they're profitable. Let me show you what's going on here on Yahoo Finance and show you guys what this company does in the first place, to give you all a little rundown. So bear with me. Hit that like button, by the way. Subscribe. It's free. I don't know if you guys didn't know that. It's free. And I think 60% of you guys are not subscribed. So if that's you, hit that subscribe button. Hit that notification bell. I appreciate you guys as always. So if you didn't know, guys, Enphase is in the tech sector. You can see right here, they're in the solar industry, and they have around 3,000, a little under 3,000 full-time employees. So pretty decent sized company, right? And Enphase Energy, essentially, together with their subsidies, they design, they develop, they manufacture, and they sell home energy solutions for the solar photovoltaic, I can't ever say that word, industry in the United States and internationally. The company offers semiconductor-based microinverter, which converts energy at the individual solar module level and combines with its proprietary networking and software technologies to provide energy monitoring and control services. It also provides microinverter units and related accessories, an IQ gateway, IQ batteries, the cloud-based Enlighten monitoring service. You guys can see storage solutions, electric vehicle charging solutions, and design, proposal, permitting, and lead generation services. So essentially, they're in the solar business and the technology sector, right? That's pretty basic here. And you guys most likely already knew that. But if you guys didn't know that, in a nutshell, that is what Enphase does. And of course, this is not a deep dive on the company, guys. We're not going to spend an hour going over Enphase here and their annual report or anything like that. But we are going to look at some basic numbers. $16 billion market cap as of right now when I'm making this video on the 19th of September. And their beta is a 1.5 as expected. It's more volatile than the overall market. That makes sense. Obviously, it doesn't take a rocket scientist to tell you that. And their PE ratio, guys, is a 30, which honestly is not that bad considering the growth that we're seeing from Enphase, that we've been seeing, and that there's, we're likely to get more of that growth. So 30, P ratio, very, very solid. And let me actually see what they're projecting the forward P to be at. Here it says it's actually even lower. Trailing P is a 29. Forward P is a 17. Holy smokes, guys. And the price of sales right now is a 6, which obviously has come down a lot. It used to be an 18 in 2022, a 22.8. That's nuts, 18. So price of sales, of course, as the stock prices come down, that's come down as well. Let me see here the financials, guys. Let's pull that up and see what's going on here. And this is where you're going to really see the growth of Enphase. Look at those freaking numbers, guys. Total revenue is the top line here. I'm not sure if you can see it, but either way, I'll read it to you so you don't even have to see it. In 2019, they did $624 million of revenue. You guys can see. Let me zoom in a little bit maybe. You can see it even better. Yeah, $624 million of revenue at the top right here. Then in 2020, $774 million of revenue. Then in 2021, $1.4 billion. Then in 2022, $2.3 billion. Now trailing 12 months, $2.8 billion of revenue. And sure, cost of revenue has gone up, but that's just how it is, guys. Gross profit has also gone up. Makes sense. And operating income has also been inching up, which is, makes sense. That's good. And the growth there is unbelievable, which goes back to what I said before. If they're looking at a forward P of a 17 and a trailing 12-month P at 29.30, that is not that bad. That's pretty good. And we'll take a look at the chart again here in a second. If we get a dump down to, let's say, the $80 to $100 range, the valuation is going to be even better for Enphase on a growth company that has a lot of future prospects. In my opinion, this is looking very pretty. We can also see if we come down here a little bit more. Net income has also been coming up. 160 million, 133, 145, 400 million, 570 million. That's very solid there. And let me look at their balance sheet very quickly. I feel like their balance sheet's got to be decent, right? Pretty solid. Total assets, 3 billion. Liabilities, what are they looking like? 2.25 billion there. Total assets or current assets, $2.2 billion. Cash equivalents, $1.6 billion. That's a bunch of cash here, guys. Let's see their current liabilities, guys. Yeah, look at that. $638 million, man. That's insane. So they could easily pay off all their debts due in the next 12 months. $600 million. They have $1.6 billion of cash, guys. Their balance sheet's strong. They're growing. I think this is a very solid company. I'm not telling you to go buy them, obviously. I haven't even bought them yet, but I think it's worth doing a lot more research into them and, digging deeper into the actual, the annual report, the different, the 10K, the 10Q, all that good stuff to see if, to dig deeper, to see if it's worth your time and your money. Again, I'm not telling you what to do. I'm not a financial advisor, but that's what I am looking to do. And look at this. Again, it's been downtrending all year. And if we pull up the 3-year chart, we can see we're at a big support right now, guys. Big support at 120, which we're holding right now. That actually held back in the beginning of 2022, also in the middle of 2021. That point needs to hold for the bulls. If we do break that, guys, honestly, I'm going to be very happy because that's where I'm going to be buying a lot of my position on this dump off. And I'm even considering nibbling a little bit here. We'll see. I haven't done it yet. but I'm looking to see if it breaks 120. If so, man, I think this is going to go a lot lower. What do you guys think? Let me know your thoughts in the comments. Hit that like button. Make sure to subscribe. Don't forget to get up to 16 stocks for Moomoo as well, each up to $2,000. Use that link down below. Open up your account and fund it with at least $100. You get 5 stocks right off the bat, and fund it with at least $1,000. You get 10 more stocks, totaling 15 stocks. And again, each of those could be valued up to $2,000. And fund it with at least $5,000 for a limited time. On top of those 15 stocks, you also get a free share of either Google stock or Tesla stock. So get on it, guys. Use that link down below. And with that being said, cheers. I'll catch you guys later.